Question number 58. Super expected. Must revise question before exam. Entity A, an INR functional currency entity, enter into an US dollar 10 lakh sale contract. Means they want to sell on 1st Jan 2001 with entity B, an INR functional currency entity. Means both company have same functional currency. Then also they have entered into a transaction in dollar to sell equipment on 30th June 2001. The contract date was what? 1st Jan 2001 and sale will be made on 30th June. Means the sale contract is an executory contract. Correct? Spot rate they have given on 1st Jan 2001 45. Spot rate on 31st March 2001. This is reporting date 57. 3-month forward rate 45. 6-month forward rate 55. Now I hope you have understood why they have given 3-month and 6-month forward rate. Correct? Spot rate on 30th June 60. Let's assume that contract has an embedded derivative that is not closely related. Understood? In question they have given let's assume. Even though this para is not given, we'll assume the same thing. Correct? And requires separation. Please provide detailed journal entry in the books of entity A for accounting of such embedded derivative until sale is actually made. Okay sir, we'll do it. Nothing to worry. Correct. Can we do this? Bolo. So we are doing question number 58. Question number 58. First, let us prepare what? A timeline on 1/1/2001, on 31st March 2001, and on 30th June 2001. Because we are doing from which company point of view? Entity A. So they have entered into a sale contract at which amount? 10 lakh dollar. 10 lakh dollar. Then they have given spot rate. Spot rate is equal to what? 45. Then become 57. Then become 60. And they have given forward rate. Forward rate is what? 55 and 45. And of course on this date it will be 60 only. Correct? Yes sir. First write down this information. Always in exam prepare timeline. What happens sometimes when we don't prepare now? What will happen? We take information from this question and it might happen you want to take 45 but in exam due to extra pressure you will take 57. 45 should be taken but you have taken 57. Better you write down. When you write down each and every information, the chances of mistake will become less. Correct? Got it? Now write down. The contract solution. The contract has two components. Point number A, you say what is the host contract? Host contract is what? You'll say me. Host contract is what? A sale contract to what? To sell what? Equipment. Equipment. After how many months? after 6 months at what? Rupees or dollar? Hmm? Rupees or dollar? Huh? Rupees or dollar? Huh? Rupees, na. Thank you very much. At rupees. So rupees will be what? 10 lakh dollar multiplied by what? You need to say. Now just try to understand. You need to say me multiplied by 45, 57, 60, 55, 45, 60. Apply your common sense. I'll just give you some hint. Multiplied by any of this rate. Correct? You are not supposed to read the solution. Huh? Once you read the solution, interest gone. It will be multiplied by any rate. I'll just give one hint. The This contract will be settled. Sale contract in rupees will be settled after 6 months. But contract is done at this point of time. Understood? Now say which rate? Huh? 50? Excellent. It is 55 only. The live student is also saying 55. Thank you very much. Understood? Any rectification required? It is 55 because can I say this rate on 1 this rate is not known, this rate is not known, this rate is not known. So this is the bakwas. When you will separate will be done on the inception of contract, na? Means separation will be done on 1. Either will take spot rate or will take forward rate. So of course spot rate is bakwas because the settlement will be done after 6 months. So of course will take 6 months forward rate. Understood? Have you understood? Means into 55, that is rupees how much? Rupees 550 lakhs. 550 lakhs, na? 550 lakhs? Yes, sir. Very good. Excellent. And will also include what? Embedded derivative. But the embedded derivative to buy dollar or to sell dollar? To buy dollar or to sell dollar? To buy. Why? Because can I say they will receive dollar? Means there is an expectation to what? Receive dollar. Receive dollar means what? Purchase dollar. Means this also include a forward contract. A forward contract to what? Buy how many dollar? Buy means I can add on receive. How many dollar? 10 lakh dollar. 10 lakh dollar at what? At which rate? At which rate? Forward contract will be entered into which rate? Forward rate only. So at what? 55. At rupees 55 na? At rupees 55 per dollar. Got it? These are the two contracts. Can I say as per Ind AS 109 embedded derivative requires separation? Requires separation? Bolo. Got it? Make it Ind AS 32. This is given under Ind AS 32. Or better don't write. In exam you'll do mistake. As per Ind AS, okay? As per Ind AS, embedded derivative require what? Separation. But this much. Now we'll separate. We need to pass journal entry. Now you will give me journal entry, okay? Journal entry. In the books of entity A. On 1/1/2001, there are two contracts. Host contract, any journal entry for host contract? Any journal entry for forward contract? No journal entry. Therefore, no journal entry. Correct. Now, on 31st March 2001, being what? Reporting date. So, they have entered into an host contract to what? A forward contract to buy. So, to buy at 55 and now it become 45, but the favorable, unfavorable. To buy dollar, expectation is what? It will increase or decrease. The expectation is what? It will, but whether expectation meet actual, so it is favorable, unfavorable. It is unfavorable, means there is a derivative liability. Correct. So what is the fair value of this contract? It is 45 minus 55, negative 10. So it will be what? 10 lakh multiplied by what? 10. How much? How much? It is 100 lakh negative. So there is a derivative liability. Correct. Simply. Similarly, now it becomes 60. Can you give me the fair value? I don't want gain loss. What is the fair value of forward contract as on 30th June? 60 minus 55. Very good. So it is 10 lakh multiplied by 5. That is 50 lakh. Now positive. Now positive means it become derivative asset. So initially there was a loss of how much? 100 lakh. Now it become gain. Gain of how much? Batao? Gain of 50 lakh. 150 lakh. Gain of 150 lakh. Excellent. Understood. You know why I have taken so much time in derivative FBT? Because of this reason. This is important question from examination point of view. It is given in ICI study material, but this you can understand whenever you understood derivative accounting. Now, journal entry, very simple. On 31st March, there is a liability. What journal entry? Fair value, loss, transfer to PL, account debit to what? Derivative, liability. You can also call it forward liability. You can also call it future liability. Correct now. We are not going into the name. Okay. Chalega? But how much? 100 lakh rupees in lakhs. It is rupees in lakhs. Then on 30th June 2001, liability become asset. What journal entry? Derivative, liability account debit how much? 100. Derivative, asset account debit what? How much? 50. To what? Fair value, gain, transfer to PL. How much? 150. 150. Simple. Correct. Now on 30th June, actual sale will happen. Sale of equipment. Sale of equipment. Correct. Let us assume equipment is an inventory here. Because if equipment is a property, plant and equipment, then we want carrying amount of that. So we will assume equipment is an inventory. In solution also they have assumed what? Inventory also. Correct. We what journal entry will do? Batao. For sale of equipment. Can I say trade receivable? Account debit to sales. In bracket I am writing equipment. You can add on, we have assumed that equipment is an inventory. Batao. This journal entry will be done at which amount? Batao. Mhm. There is a host contract to sell at 10 lakh into what? 55 na. So it is 550 lakh, 550 lakh. Understood? Correct. And now, can I say we have a derivative asset that also requires settlement? But can I say whether it is a derivative contract or sale contract, amount is receivable from whom? Entity B. It means derivative asset will now become receivable only. So now it will be trade receivable. We'll call it trade receivable. Account debit to a derivative asset. How much? 50. And you can see now the amount receivable from B Limited become what? 550 plus 50 is equal to what? 600. 600. Got it? Now you must be thinking, sir, why we have done this? If the amount receivable is 600, then better we'll do journal entry of sale at 600. Why this much? This is for proper presentation in SOPL. Just try to understand. If I prepare extract of SOPL, so there are two financial year यहाँ पर. What are the two financial year? One is year ended, means it is 31st March 2001, means 0001 and 0102. There are two financial year now. Correct. In the first financial year, how much revenue? You can say revenue is 0 and here the revenue is 550. Revenue remain 550. Revenue is not 600. Just try to understand. If you will not separate embedded derivative, then revenue is 600. But what Indians want to say, actually revenue is 550 only. Revenue is not 600. I hope you are understanding. Have you understood this point? So revenue means sale is what? 550. Sale of equipment is what? 550. And there is one fair value gain or loss. So in first year there is a gain or loss? Loss. Loss of how much? Loss of 100 negative. And here there is a gain of what? 150. So this become what? SOPL. So you can see we have recognized the gain or loss from derivative contract. Derivative contract. Have you understood the presentation part? I hope you have understood. Any doubt? Super simple question, but if you will not revise, then you will not be able to answer it. Therefore, I have written MRQ, must revise question before exam. Correct? Last journal entry is what? First journal entry we have done for what? Sale of equipment. At which price? At which price? That is 10 lakh into 55. Then settlement of derivative contract. But because the amount will be receivable from same party, that is entity B, therefore we have converted derivative asset to trade receivable. So journal entry become trade receivable. Derivative asset means what is the total amount receivable from B Limited? It is as per contract only 550 plus 50. But out of 600, 550 is revenue and whatever we are receiving 50, that is for which contract? Derivative contract. Understood? So we have separated derivative from post contract. Now have you understood this journal entry? Please respond. If you have understood, I'll proceed. Otherwise, I need to 1 second do it. I'll take one more question for practice. Yes, sir. Understood. Come to one more question. Yes, yes. Cash settlement. One more journal entry you do. If you want to do it now. Assuming that cash is received as on today, because that is not given. You can write down what? Cash account debit to trade receivable on the same date. You write down bank. Here also bank. Bank. No, both bank then. because amount is receivable from whom? Entity B. If this is received, so this will be also received. You can't say na कि first 550 is not received and 50 is received, because entire amount will be receivable from whom? अरे बोलना रे, entity B ना. So one transaction you are saying it is not received, another transaction you are saying it is received. So it is what? Not practically, means this is not practical assumption. So either you write on bank or write on receivable, whatever you want to write. But better, whenever question is silent, it is receivable. And then you can pass one more journal entry, bank account debit to trade receivable 600, the day when it is received. Correct? Got it? Yes, sir.